Good day to all. This is our discussions involving property, plant, and equipment, which is normally the first line item that we can see under non-current asset section of the assets side, left side or section. Now, to properly introduce the topic, this will be the first part or part one of our property, plant, and equipment discussions, which will focus on initial recognition, the first time or very first time that we are going to recognize PPE items as part of our accounting records towards financial statements, and how do we measure them, or how do we assign values to such property, plant, and equipment items. The related standard will be PAS 16 or Philippine Accounting Standards number 16, which is property, plant, and equipment. So refer to that standard to see the full version. Now, for our learning objectives or outcomes, the learners at the end of the chapter or lesson should be able to identify the different modes of acquisition of PPE. When I say PPE, by the way, that means property, plant, and equipment, because actually there are various ways or methods of acquiring or buying or purchasing PPE items, not just with cash or on account. Then we have to state the elements of cost of PPE. There are actually components of the cost. There are actually several amounts or values that could be part of the cost of PPE. Third one is we have to state when do we capitalize, especially the capitalization of costs, which means that we are going to add or include certain costs or values or items that are capitalizable or should be part of the cost as stated in the second objective, and up to which time or up to what point. That will be discussed accordingly. Now, for the characteristics of PPE, there are actually certain definitions that would involve the characteristics. However, these are the common characteristics or the usual ones that we can spot on different definitions. First is PPE are tangible assets, meaning to say they have physical substance. They can be perceived by our senses. Like, for example, the buildings, the land, furniture and fixtures, etc. That's the first item. Second is it can be used in normal operations. So operations of the business normally would involve the production, the delivery, which is of course part of our sales, and then for administrative purposes or activities of the business, like the other departments doing their functions or functional departments other than the production department and the sales or marketing department, or sales and marketing. So they're used in the production or supply of goods or services. That's production and sales. Rental, it's possible that we are going to organize a business for rent, or it's just an incidental, meaning another source of income, and that is for rent and for administrative purposes. Now, PPE have to be used or can be used in long term, meaning to say more than 1 year. Hence, the concept or the reason for classifying as part of non-current assets. Then, recognition is the process by the way of incorporating on the financial statements certain accounting elements or values. Like for this one, specific accounting element is the asset. To be more specific, non-current asset. To be more specific, the property, plant, and equipment. Then the cost of an item of PPE shall be recognized as an asset only if, so in other words, these are the two principles under asset recognition principles, that it is probable that future economic benefits associated with the item will flow to the entity. That means that probable is when the possibility of something to happen is greater than the possibility that it will not happen. So in that case, 51% happening, 49% and lower down not happening. The 51% should be up for happening. That's probable or probability. And then the assets will contain future economic benefits. So these benefits, of course, should be contained therein or thereat to the asset, and will be consumed accordingly over time or the useful life of the property, plant, and equipment. and the cost of the item can be measured reliably. So we must be able to determine the value of that accordingly PPE item. So it can be at cost plus the other incidental costs. Incidental costs, by the way, are costs needed in order for the PPE item to be usable to its intended condition. And then it can be for present value, especially for acquisition using notes payable, which are non-interest bearing, wherein the present value will have to be computed or extrapolated out of a discount rate. So this means that you have to go back to the discussions about property, plant and equipment, and then with respect to the present value, especially the present value under time value of money. I understand that others are done with finance subjects, so you know these things. And other means of determining the cost, but normally those are just the cases like the exact values and then the present values. All right, for initial measurement, we have to measure PPA at cost. And if we say cost, the purchase price will have to be included. How much is to be paid? Like for example, 10,000 for that particular machinery, let's just say, and then including non-refundable purchase taxes. It's possible that taxes are, of course, to be paid out of that particular acquisition. And then we have to incorporate that. And also import duties. If, for example, we acquire PPE items from abroad, so these items are needed in order for the asset to be ready for its intended condition. And then after deducting any trade discounts and rebates, remember in discussions for merchandising concern, the trade discounts have to be deducted from the value or cost of the PPE or any other inventory items, for example. Trade discounts are discounts that are obtained during the negotiation stage and would immediately deduct as a deduction from the value and would not be part of the invoice price. So list price minus the trade discount is the invoice price that will be part of our cost of asset or PPE in this case. Number two, cost directly attributable. So these are the incidental costs that I mentioned to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. Whether we like it or not, there are certain costs that have to be paid for in order for the PPE to be usable or ready for use. So example, let's say we acquired for machinery, we have to incorporate, we have to know, of course, the cost, let's say for installation. We also have to consider the cost, let's say for the handling, since there could be some payments of the movement from the shipping area and let's say just close or just beside the vicinity of the location going to the intended location. So handling costs could be paid. Insurance could also be part, especially for very valuable PPE items, wherein the company and the management would decide to protect itself from any fortuitous events or events beyond the control, like the calamities, natural calamities, for example, and then accidents can happen. So in that case, at least the company can obtain, if not 100%, at least a portion of the cost of that PPE. So that's loss minimization concept. And number three is present value of the commissioning and restoration costs. So example would be, let's say that the PP item is going to be installed and then in a certain area, it will have to be attached there. But when we are going to remove or we have to get that particular PPE item, let's say machinery, in order for that particular area to be ready also for another installation, then in that case, we have to decommission, we have to restore that particular area and we have to pay for that. Will it happen immediately? No, it will be an X number of year or years from now. That's why present value is to be incorporated, and that's why it will be part of the cost. However, this is the decommissioning and restoration cost of the current asset, current PPE that is to be installed or that is to be used or that is ready for use for the entity. The old decommissioning and restoration cost of another PPE, which is again the old, was already part of the old. So it will not affect the current. Normally, that is one area that we have to take note. Then after this is cessation of capitalizing cost to PPE. When do we stop capitalizing the cost? If we recognize based on the two items under our asset recognition principle, then we are going to cease recognizing the carrying amount of an item of PPE when the item is in the location and condition necessary for it to be capable of operating in the manner intended by management. So we don't include anymore, we don't add anymore because the asset was ready. So only the cost needed for it to be usable shall be capitalized. The rest, expense, with exceptions that we will know eventually later on. But for now, let's put it this way. Then measurement of cost. For the cost of a PPE, it shall be recognized at its cash price equivalent at the recognition date. Cash price equivalent is the amount that, for example, if we are going to acquire an asset in installment basis where we pay certain amounts all throughout the period, let's say months or quarters or years, so we will convert that into a value that when we buy it in cash basis, how much would that be? That's the cash price equivalent. And then if payment is deferred beyond normal credit terms, so that's beyond already what is the usual, let's say 10 days, etc., then in that case, there would be a certain computation of present value or the present value factors to get the present values of the cash flows. So why is that? Because again, the entire payment will be done in the future time. So we have to know how much is its value at the current or present time or situation. So the reason that in that case, we compute the present value, in this case is now our cash price equivalent if cash price equivalent is not given. And then the first item will be the installment sales price or the list price. And then we deduct the cash price equivalent if present, if not the present value. And the difference is our interest expense that is, of course, supposedly to be paid in the terms, but then initially that's going to be our payable or liability. So in that case, then we call this the discount on notes payable, in which we will allocate that over the period of credit. So if the credit for the acquisition of PP is good for, let's say, 3 years, so the interest, of course, from the discount of notes payable as a line item or as an account title, then that will be closed by crediting that and then debiting the interest expense over the credit period. So in that case, you have to use then our amortization tables for such. Next is the cost of land. So this is one item under PPE now. We have the purchase price. Of course, that's already discussed. We also have to include the broker's commission. So any commissions paid by the company for the broker, which is needed for the acquisition of the land, shall be capitalized. Second also is closing costs. For example, if we acquire that land, we need it to be titled in our name. So we need to pay for titling costs, attorney's fees, and recording fees. So registration for our Bureau of Land, for example. Then the third is if the land is not yet ready, so we have to spend for surveying, grading, filling, draining, and clearing. So clearing is the normal, like there are a lot of grasses or shrubs there or trees which are not needed. So we have to clear the area. Then draining, if, for example, there are like water sources from there. So we have to remove since the foundation could be weak. So some situations like that. Then any unpaid taxes prior to date of acquisition. Let's say there are real property taxes unpaid by the owner before and then assumed or paid by the buyer now. Then any liens or mortgages or encumbrances on the property. So this means that the property was used as a collateral for any credit transaction. So let's say a loan from the bank, it is used as a mortgage. If the mortgage is assumed by the company, then that will form part as the cost of PPE. So that will be an addition, and then that will be a credit to mortgage payable, for example. Next is special assessments for land items normally. Then option paid to acquire the land. Let's say option money, which is discussed in law subjects. This is the money that is spent in order for the seller to give us the consideration for a certain time for us to have the money needed to acquire the asset. So example, let's say the company, of course, this is on the part of the business, wants to acquire land. And then it paid an option money, let's say for a certain amount, X amount, for it to be given X number of days to look for the money, to prepare for that. So that is option money, which is not yet part of the price. If the land is acquired, meaning the acquisition is successful, that option money will have to be included as part of the cost. If unsuccessful, then it will be expensed immediately. Then number 8, costs incurred to induce tenants to vacate premises and cost of relocating and reconstructing property belonging to others. So there could be, for example, certain people, the tenants who are still using the property, and then of course we are the new owners now, then we have to require them, if not first convincing or inducing them to vacate from the area. And then, of course, including the relocation cost of them. Then reconstructing the property belonging to others as well. Number 9, initial estimate of restoration costs for which the entity has a present obligation. So we use the land and then we, let's say, improvised or we developed the area in some extent that it is not the same as condition before, and then at the end of the contract for a certain term, we have to restore it. This is actually a discussion under depletion for wasting assets. But that is just an example wherein we're going to use the present value of that. The number 10 is any additional land improvements that have indefinite useful life, which means that when we improve the land, then it forms part of the cost of the land because its particular useful life or the time that we can make use of that, we can enjoy the benefits will of course not be determined exactly, like draining. So if we drain the land or area, we cannot associate a certain land improvement for that we can really classify separate from the land. So that's the point, that it is capitalized as part of the land because it is part of the land and it's permanent in nature. So land improvements will also be discussed later on. Okay, this one. So for example, if we develop the land by constructing fences or walks or parking lots, they are differentiated from the land itself. And we can really classify them separately. Therefore, these items are to be part of land improvements. We have to take note that these items are not permanent because they are depreciable as compared to the land. And this is a general rule and the usual thing for the land. Among other land improvements, like if we cost the trees, shrubs, plants, and other items for the landscaping. So these are parts of land improvement. And that's our first part for our discussions involving PPE Part 1. Again, still initial recognition and measurement. Please stay tuned for the next part. Thank you very much and God bless us all.